Eric Muathe with Muathe.com. Today let's take a look at a stock here. It's a London Exchange stock, and let's take a look at it from 2 points of view based on RSI 69.1 and RSI 50. Now this is all data monthly. Let's take a look at the period when the RSI bounced below 50 and back above it, like this period here, for a nice re-entry. And then we see another period here which was double bottom support. Now if we split that in half, you can see that it is uniform action below 50 and back above it for the re-entry somewhere here. Now both re-entries were successful. Now there's also another way of looking at this, which is to say that strong stocks tend to hold above RSI 50. Other than this period here, which was not uniform action below 50 and back above it, the stock has generally been above RSI 50. As you can see, been trading above RSI 50 for the most part, again, other than this short period here. And that's why you can see that over time, over many years, the stock has had a chance of moving higher. So that's the generic view. Above 50, stocks tend to have momentum to the upside. And one can also see that this period right here in, let's call it middle of 09, there was a slight blip where the RSI went below 50 and back above it for this re-entry. Of course, that was successful also in taking the stock lower off the lows of 2008. Now, if you are purely looking for momentum, which is to say you are only interested in levels where the stock gets into a high gear and starts moving higher, you can see clearly stocks tend to get into a high momentum phase when they move above 69.1 and stay above it. Let's test that. Take a look at this movement here in, let's call it late 04, which is that breakout, and the stocks generally defended that level. Other than a short blip period here, we held above 69.1 throughout this run. And again, we re-entered 69.1 here in 2010, somewhere around there, and held above it, other than again this short period where they dropped below 69.1 but recaptured it immediately. So generally speaking, we were above that throughout this period here. So in the current market, the stock is coming back and moving above 69.1 for the first time since 2013. So the key for any further advance in price action depends on whether it can defend 69.1. So bulls in the stock want to see the stock hold above 69.1. The more it stays above 69.1, the more one can expect higher prices. Failure to hold above 69.1 and rejection at 69.1 suggests that around here one can expect a top and that the next meaningful direction is going to be down. So above 69.1 is bullish, rejection at 69.1 is absolutely bearish. Eric Muathe with Muathe.com. As always, good luck, peace, and